Hey, Mom, how's it going?
I am having a fantastic day, Lindsay. It is a Friday and we had a solid week. We're all getting ready to be together. Our team's getting ready to be together, which I'm super excited about. How is your day going?
My day's going good. We started the day off great at the gym and we are house hunting. So we actually did a house visit. You were actually with us. So it's like kind of weird telling you this, but because you were like literally there. But we found a cute little house a mile away from your house. So it was a fun morning of like doing something new. You can't say you start every day like that.
Definitely not. But the people that we have on the podcast today have a lot to say about something that'll impact your morning, which is interest rates, right? So I
Hmm.
love
Hmm.
that you started your day thinking about something that we can actually tap into the brains of some really smart people to talk about what's happening in the world around us and in the environment. So, yeah, that's pretty cool.
Yeah. Well, we have been working on getting these guys on the podcast for a while. We are super excited to have Scott and Keith from InsurBanc on. Hey, guys, how's it going?
Hey, good
Good
morning.
morning, Carey and Lindsay.
Morning. I would love if we could just do a short little intro for our listeners to help get to know you both a bit better and kind of frame our conversation. So, Keith, why don't you kick us off?
Sure. Good morning, and thank you very much for having us on today. I'm Keith Mangini. I am InsurBanc's commercial team leader, making loans to independent agencies for the last 25 years. The bank opened in 2001, and I am very proud to say that I will be celebrating my 25th anniversary this year with InsurBank. And
Congratulations. That's awesome news. I love it.
thank you very much.
All right,
That's
Scott, give him who you are, my friend. Tell
Good
him all
morning.
about you.
Hi there. I'm Scott Freiday. I am the division director for InsurBank. I'm a young pup here. I've only been here for 10 years. So I've been a commercial lender for almost 30 years. I've helped hundreds of small and mid-sized businesses get almost $250 million of capital throughout the world. So happy to join everyone this morning.
Yeah, I love it. I love it. Well, just like Lindsay, interest rates are on the minds of a lot of people. It's been a factor that has impacted our marketplace pretty significantly. Nays on the minds of a lot of agency owners. They're thinking about, is this my high? And obviously, the cost of money impacts what can happen. So, give us if you want to give a little bit of an overview of what's happening in the marketplace from your perspective as a lender, and then we'll go into maybe some advice for agents. But yeah, if you want to kick us off and tell us your views on that, that'd be great.
Yeah, sure. Yeah, I mean, as we know, interest rates impact everything. So we've all been, living what's been going on with the rate environment over the past few years. I think this year in general, we expect maybe a little bit of a rate decrease towards the end of the year, maybe one or two cuts, but there's talk of a rate increase next year. So I really think when you're looking at interest rates, the time to act on that is now. I think really trying to time the market for the next Fed cut, waiting for something like that really could put you in a position where you don't have enough time to react to what you need to do. So I think, keep obviously an eye on the labor market, keep an eye on inflation. Those all impact what goes on with rates. Keep an eye on the Fed minutes. But in general, I really don't see a lot of cuts happening this year. And really to give you a sense of where we are with rates, the Wall Street Journal prime rate today is 6.75%. The historical average is just about 7%. So we're operating kind of in that average interest rate. The all-time high was 21.5%. And the all-time low, we all just lived it just before COVID, the low 3% range. So I think we're running just below the historical average. And then the last thing I like to tell people is short-term rates and long-term rates really don't move hand in hand. And most banks borrow using long-term funding. Even though you see the Fed dropping rates, it's not necessarily going to impact your lender's rate. So when you're thinking about the rate you're going to borrow on, Lindsay looking at a home or agency owners looking to buy a business using longer term funding, you really want to focus what's going on with the long-term bonds and kind of the 30-year mortgage rate to get a sense of what's happening with interest rates out there in the market. So I think that's kind of my overview on how I look at interest rates. In general, the long-term rates tend to follow the short-term rates, but they don't necessarily move lockstep. So certainly keeping an eye on what's going on in the market, but I really do think now is the time to act when we're looking at interest rates in terms of either doing something with your business or doing something with your home. I think that the environment right now is where we need to be.
So, Scott, I have a big question for you. You said something magical in there because I think people love to watch the news and think something's going to hit immediately. Like, hey, I saw that they met yesterday. They dropped the rates. That means I can call my bank and say, what's my better rate today? What is a reasonable expectation about when the impact of what the government's doing will actually change what the consumer's rates would be? Like, what's a reasonable thought process there?
Right. So on the consumer products, you're going to see an immediate impact. So your credit card rates are going to go down. If you have a HELOC mortgage out there, anything tied to a variable rate, your lines of credit, those will all drop immediately. It's the long-term funding rates that are going to take a little bit longer to trickle through. I'd say our cost of funds really hasn't moved much more than 25 basis points over the past year, I'd say. From a lender's perspective, our cost of funds has remained relatively stable. Yeah, there's been some kind of increases and slight decreases, but it's remained relatively stable. We don't see those immediate decreases in interest rates. And in fact, we've seen situations where the Fed has cut rates and then our index has actually increased a little bit. So it doesn't necessarily move hand in hand. I think this gets back to the time to act is now. Don't really expect that a rate decrease at the end of the year, all of a sudden you're going to see all the lending rates go down. That's not.
You said another thing that had me have a question. Then I'd love for Keith to jump in and talk about how agents should proceed forward. But you also said the time to act is now. And if you try to time the market, just like you try to time buying a stock or selling a stock, et cetera, you're not going to be able to react quick enough or be able to make things happen. And that's a bad strategy. So I would love to talk about timing. In my world, people have this idea that you can find an agency, buy an agency, and have it all done in, if it's November, they think you can do it by 12/31, which is like, my goodness. But tell me what's a reasonable time frame for that process to take place once someone comes to you and they have a deal in mind, et cetera. What do you tell agents when they come to you and they want to close in a week? Like,
Yeah,
either one of you. Yeah.
I think that's always a challenge because you're always trying to manage our clients' expectations. And we've done deals where the gestation period has been 6 months. It's been a year. You start talking to clients and, they have an idea of what they want to do, and then the deal takes them on a different journey. But, we're very good at what we do. I'm proud to say that. And as far as the timing of how the process takes, year end, we were very, very busy. We had a lot of activity going on, and we had people calling in October or November looking to close for December. So we can certainly put together a deal very quickly, but it's what we discuss with agents and when we're out in the field and we're talking with people about preparing yourself for those opportunities and having your financials in order. If you have everything in order and you have an engaged seller and an engaged borrower and you're surrounding yourself with partners and you have an industry bank on board and you have people like yourselves on board to assist, we can put together a deal rather quickly. And some of those deals that, we put together at year end, 30 to 45 days from origination to close. So it's really a matter of how organized the agents are, their financials, and to engage in all the parties are engaged to get it done. I wanted to step back and kind of follow up on what you were talking about with rates. And we had a lot of conversation with clients in 2025 and beginning of 2026. And, you have a lot of clients who are waiting for that perfect rate, right? They're waiting for the rates to come down. And, as Scott was alluding to, asking about rates in 26 and what do you guys expect and what should I do? And I think a very important thing to impress upon agents is don't wait for that perfect rate. That could certainly backfire on you. You're going to miss out on opportunities, right? We call it a hesitation trap of waiting for that rate. Competition doesn't stop, right? Quality performing agencies, they're still going to transact. Seller motivation, they're still there. They've got sellers. As we know, we have principals in the industry who are getting ready to sell. They're aging. They're looking to have that, their end game. And what is that going to be? They still want a deal. Once markets start pricing at lower rates, buyers step in, valuations go up.
Sure.
No, it's just, I think one of the important things to say is waiting for that perfect rate might cost you more than it's going to save you, right?
Right. And
100%.
don't lose focus on what you're trying to do is buying that additional cash flow. So, that benefit far outweighs any small
Yeah.
increase in a loan interest rate. So don't take your eye off the big picture of what you're trying to do. And then getting
Right.
back to your point, Keith, surrounding yourselves with the industry consultants, the industry banks, the industry advisors like Agency Focus, that's really going to set you up for the best chance for success for all these transactions. Being prepared, having your information in order, working with the experts, those are the transactions that tend to trade at the highest values and tend to, go the smoothest, at least in my opinion.
And even a moderate decline in rates is helpful, right? I mean, that can meaningfully change the economics of a deal for agency owners. Lower rates translate to, they help debt service coverage ratios. They make your monthly payments more affordable. They'll pull down your longer term borrowing costs. That improves affordability for acquisitions and for working capital. Valuation multiples, those improve when the rates come down even a little bit, especially for books that have a really high retention, that are really performing, high retention, good loss ratio books of business. Even a slightly lower rate, it's not just changing the payment, but it's really changing the math of the entire deal that you're looking at.
Yeah. Can I ask a dumb question?
No
I
dumb.
ask a lot of dumb questions on this podcast, but are there ever times where a person, based on factors that make up this person
Can't
or
hear
this
you, Keith.
agency, you can't hear me?
Can't hear you. I wish I could, because I bet it's a great question.
It sounded really good.
I could read
Sorry.
lips.
Can you hear me now?
Nope, can't hear you, babe. Yeah, I can read lips there, and that's definitely don't say that on the podcast. I do have a question for you. So you said something, it does change the whole economics of the deal. It does change the whole economics. Linz, now you're an echo, babe. What is happening right now? Obviously, all of this is getting
someone
cut out,
called
gentlemen.
me. Yeah, someone called
Okay.
me. I'm sorry.
Okay, go ahead with your question, then I'll give mine, Lindsay.
Okay. My microphone isn't.
No, we can hear you. We can hear you.
Okay. So let's cut all of that out. Let me mark this clip. Okay. So I want to ask a dumb questions. I ask a lot of dumb questions on this podcast, but one of the things I want to know is there anything that makes up a person or an agency that can actually impact the rate that they're given, or are they like locked in, whatever the rate is what the rate is? Like, can you make any movements as a lender, or what does that look like if they can?
This all ties into creditworthiness. So, what is how bankable is the person and how bankable is your business? So, the better you run your business and the better you handle your personal credit, the better credit you're going to generally qualify for, right? So we always encourage people to obviously, run their business as best as possible. Having good financial reporting, I think, is key. Being able to tell your story the best way possible is key to when you're talking to a lender. Managing your personal credit, make sure that you pay your bills on time. It's important to look at your credit report as well to see if there's any blemishes out there that you may need to deal with. A lot of times there could be some medical debt out there that you're unaware of or things like that. So make sure you take a look at your credit report from time to time. Make sure you clean that up. And those are all, I think, easy things to do to help a business qualify for, the best financing that's available that's out there. Folks that,
I think Scott, this thing right here is something that we spend a lot of time on with agents, because they don't realize how they run their own business, how they present their financials, what they decide to put through their business as a discretionary expense matters. It really, really matters, because, correct me if I'm wrong, but the banks actually looked at the combined profitability when they lend, not just the profitability of what you're buying. So if your P&L, if your financial statements don't accurately reflect how profitable your agency can be as a buyer, it actually hurts you as a buyer and makes you less competitive as a buyer, because there's this cleanup process that has to happen in order to get to that number. Correct me if I'm wrong, but is that accurate or not?
yeah, absolutely. Yeah, that's accurate. And then having accurate financials, I think, adds a lot to the mix as well. You guys do a lot of fractional CFO work. So, having good quality financials is critical for underwriting. So, the better quality information you have both internally and working with the CPA, that all just helps, add more credibility to the story.
And
let me
Lindsay,
ask,
I'd go back to your question, and it was a good question. And over the years, we've done some studies. And while Scott is absolutely correct, an individual's financial condition is important. We've found that agency principals are very good at managing their personal obligations. How they manage their personal obligations is very much how they're going to manage their business obligations. So for the most part, they all have good credit bureau scores. They're very aware of what's on their credit bureau report. They're very, very good risk pool to lend to.
Yeah.
so what about if there's multiple owners? Do you take into account all of the owners' personal finances as well?
Absolutely.
Yeah.
And, from structuring a loan, multiple owners in an agency, they're going to be providing their personal guarantees. So, to continue following up on Scott's point, we're going to be looking at their credit bureau reports, their personal financial statements, their liquidity, their net worth, how many toys they have. And, certainly if you're looking to engage in a transaction where you're looking to bring on debt, you're looking to buy somebody, you might have to make some sacrifices. Talk to your family. Is this something that you really want to do moving forward? You might have to eliminate a vacation or two, or maybe you can't go out and buy that new car. Some short-term sacrifice for long-term gain is key to making these deals work.
Yeah, it takes a lot of discipline to swing a $2 million loan payment. So you want to make sure that you want to make sure that you're preparing yourself to make that acquisition. So you want to make sure you're adjusting your personal lifestyle so that when you get ready to buy that you're in a good position to operate that business as best.
So one
You
of the
guys sound like
things
my
that I
husband
think is
chopping my
really
Starbucks. You guys sound like my husband chopping my Starbucks budget in half, which has really pissed me off this month. I'm like, can we just buy this house so I can start drinking Starbucks every day again, please? Thank you.
So one of the things that I'd love to talk about, because you brought it up, knowing people understanding your business is really important in finding the right person to value your business, the right tax people to listen to, because all of this has tax implications as well, the right lender to go to. If you could just put into words, because there's been a lot of change in the lending environment where we're focused on independent agents. So I think some agents out there might be saying listen, the people I actually knew in the industry may not be in those roles anymore. Why is it so important to talk to someone who understands your business versus other lenders that might be your local bank, et cetera? Talk to me about that a little bit.
Yeah, sure. And I think first and foremost, working with an industry lender is the most important piece out there. You hear a lot of times people are talking to their local bank. Many people don't understand how to lend to an insurance agency. There's no stuff to lend against. There's no machinery and equipment, so they consider it an airball, and they automatically assume they're going to put you into an SBA product. So if you're talking to a local lender, that's usually where you're going to end up when you talk to those folks. When you talk to an industry lender, they're going to be asking you things about, and what's the quality of the book of business? Are you a personal line shop? Are you a commercial line shop? They're going to speak your language and really be able to provide a much better experience for obtaining a loan than talking to your local bank. There has been a lot of transition within the industry bank world. There's been some folks that have moved from some different banks. There's been some folks that have moved from banking into the agency network space. With that said, I think all those banks do a great job at what they do, and everyone kind of has their lane and how they fit. Some of the folks focus on larger transactions. Some are focusing on smaller. Some are SBA lenders, while others are conventional lenders. At InsurBank, we can wear both hats. We can do the conventional financing, or we're also a preferred lender with SBA. So I think talking to an industry lender is important, and then making sure that you are comfortable with the team that you're working with there as well. And I think that'll give you the best experience possible when you're, looking out there in the market for finance.
Yeah. And I think just to follow up on that, Scott, as I said earlier, I've been lending for a lot of years, and it's amazing to me how we're constantly educating our clients, right? And we get calls, and how does the process work? I just spoke to my local bank, and it made it sound like I can't get anything accomplished. There's no value in my business, right? And it's funny to say that, independent agents, they're sitting on assets that are more bankable than sometimes they even realize, right? The commission streams, they're recurring, they're sustainable, they're bankable, renewal income, It's predictable. We can finance that. There's long-term value. And that's something that you guys understand, industry lenders like InsurBanc understand. We talk to agents all the time. They're unlocking value without giving up control, whether that's acquiring businesses or buying out a partner or investing in producers or technology or creating liquidity. We're constantly talking to clients. And as our bank president, Dave Trauca, loves to say, we love to give free advice. So, we're talking to clients 6 months down the road. They call us and say, hey, I remember that conversation. I did what you said. I have this opportunity in front of us. Let's go to work. But it amazes me how, 25 years later, we're still educating our clients on the value of their businesses and really what do they have?
Well, because the reality is it's not something that some agents think about every single day. They're thinking about, how do I get the right team in place? How do I serve my clients? How do whatever? And they're not thinking, how do I maximize the value of my agency today? Like, it's really not top of mind. So I feel like there are some of us in here that's our job, is to keep reminding them, A, it's super valuable, and B, don't make a decision that devalues it unknowingly. So Scott, when you were talking about the different banking opportunities that are out there and the different structures, I was thinking to myself, the average agent might not know where they fall. They might not know, should I be looking for someone that's an SBA lender? Should I be looking for whatever? What would you say to an agent that's hearing this and thinking, well, goodness, now I'm even more confused. I don't know which one to go to. Like, how would you respond to that?
Yeah, I think the best thing to do is to reach out to an industry bank and, start the conversation. A great way to start a relationship with a lender is you could open up a deposit account. You could open up a line of credit. They become familiar with the bank. And then when an opportunity comes along, say an acquisition opportunity or a perpetuation opportunity, you're that much better known to the bank, and we can provide financing that much easier. That's a great way to start a relationship. You could approach a bank and send them your financials and say, could you give me a sense of what my borrowing capacity is as an agency owner? And then we could then tell them, based on the size of the agency, you could support a loan of X, which could be used for a myriad of things to increase value. You could hire people. You could purchase technology to operate more efficiently. And with AI going on, I think that's a real big push we're seeing this year. Obviously, the acquisitions, you could acquire an entire agency. You could do a book lift out. We're seeing a lot of financing for loans to individuals to buy small pieces of equity in an agency. I think there's a lot of different ways that agencies can grow their business, increase value, and just by having that conversation with a lender, that'll get you down that.
Yeah, and Scott, just to follow up on your point, we love to make loans to clients, right? So talk to us. You might not have an immediate lending need. Open up a deposit account, get to know us, get to know the staff, get comfortable. We get to know you. Give us your financials. We can give you an indication of what we might be able to do for you. So when that opportunity arises, you have comfort with the bank you're working with, and it makes the process all the more easier. And then also, just to follow up, let's talk about refinancing, right? And it's often an under discussed opportunity. I think some of the smartest growth we're going to see in 2026 comes from better structured debt. Not more debt, but let's structure what we have now. Let's look at our balance sheet. Maybe we can lower our payments, extend terms, free up cash flow. So maybe you can hire that producer or hire that CSR that you're looking for. It's really about creating efficiencies within your operating expenses, Carey, as you were alluding to as well, and eliminating some of that fluff in the income statement, right? Some of those expenses for the country club memberships, and running your personal expenses through your agency. Because as a lender, we're going to look at that, and that may not allow us enough cash flow in order to make a deal. But certainly, you might not have that acquisition target yet, but looking at your current balance sheet, looking at the loans that you have on your balance sheet now, refinancing those in today's interest rate environment can be very helpful to an agent down the line.
Yeah, and I'd say on loans, especially some of those loans out there that have those balloon payments that are coming due, like really keep an eye on what that rate is that you have now. Some of those loans are priced in, 3 or 4% range, and the lenders aren't going to be able to honor those rates when they balloon. So you may have to actually come up with some capital when you go to do a refi of a balloon. So I'd say just be very cognizant of what your interest rate is. Certainly if it's higher than what's in the market today, it certainly makes sense to refinance.
So I was talking to one of my clients actually this week about this topic exactly. And, he has a business loan. He's done some work on some of his buildings. There's lots of different little things that he's done over time and consolidating that loan into, but there's some real estate parts to this. So tell me, is that something that you all could help with? Because many agency owners buy their building. Many agency owners have multiple, they do something with their cash and they have investments in real estate. So tell me, is that part of what you could help them with?
Sure, absolutely. We do commercial mortgage financing as well as agency term loan financing. And a lot of times we'll do financing where it's an acquisition and then they're purchasing the building as well. So that's under a separate property LLC. And we can do a 75% mortgage to the property LLC, but then we can do a term loan to the agency for the other 25% because there's value in the book of business. So in effect, we're doing 100% financing for a building purchase in combination with supporting the agency's growth. So yeah, we can absolutely.
So sometimes I think agents think, well, this is the bank if I want to acquire, and this is the bank if I want to do something else, which is sometimes could get yourself in trouble because you're actually not being efficient with the whole process, I'm glad to hear that. So anybody listening, if that's what your thought process was, that's actually not accurate. These banks actually understand the whole picture of your business and they can provide a service to you as well. So, all right, to wrap things up, and we're starting 2026 and I'm an agency owner. I know where interest rates are. What's the biggest piece of advice? I'm going to give you both the opportunity. What's the biggest piece of advice would you say to agency owners that are facing 2026? What would you tell them as a financial leader in this industry? Keith, you can kick us off. What would you tell them?
Thank you. Thank you, Carey. I think just a couple words here, act early, think big picture, right? Think strategically. You have valuable assets, leverage them wisely. I think this is a year that could be very compelling for a lot of opportunities out there. And as we talked about earlier, don't wait for the perfect rate. It's not about timing the market just perfectly. I think it's most important to be prepared for when the opportunity comes to you.
Love it. All right, Scott, what words of wisdom do you have for agents?
And then, I think, piggybacking on what Keith said, then making sure your financial house is in order. Make sure that your documents are all ready to have that conversation with the lender. If you haven't had that, if you're not actively speaking with your lender on a regular basis, make sure that you can get your company prepared for financials, make sure that everything balances and looks good so that you're ready to have that conversation.
Yeah, getting your house in order is so very important. So you are prepared and you're not the one slowing something down when you actually want it to be sped up and you want it to go smoothly. Right. So, well, thank you both for coming on and sharing. I always love having other people in the industry that share our views and actually want to see agents be as financially sound as possible and have as many opportunities as possible. So thank you for coming and joining Lindsay and I hope we get to see you at an event coming up. It's always great to run into you both. So thanks again. Yeah.
Thank you very much.
Both.